So, if you're a trader, you almost certainly started out using candlestick charts, right? They're kind of the bedrock of technical analysis. But what if I told you that packed inside every single one of those candles, there's a hidden story, a battle that tells you who's really in control of the market? Today, we're going to crack one of those candles open and learn how to read the story that's been hiding in plain sight. On the one hand, you've got this standard candlestick. We all know it. It tells you what happened. Price opened here, closed there, hit this high, hit that low. Simple. But what you're missing is the how and the why. The footprint chart, on the other hand, well, that's like getting a look inside. It shows you the actual fight, the raw data of buyers and sellers clashing that created the candle in the first place. All right, so first things first. Let's talk about the tool we all know and really pinpoint the problem. What is this hidden story that a simple candlestick just can't tell you? I mean, think about it. You see a big, strong-looking green candle. Looks super bullish, right? But what if it took a monumental effort from buyers to get it up there, and now they're completely gassed, running on fumes? Or flip it. What if you see a scary red candle, but price isn't really moving down because some huge unseen buyer is just sitting there absorbing every single sell order? That story, that's the critical stuff you're missing. And that right there is where the footprint chart comes in. It's the tool that's specifically designed to decode that hidden story and show us exactly what's happening under the hood. So what is this thing really? Well, the easiest way to think about it is like an X-ray for a candlestick. Instead of just those 4 basic price points, you get to see the actual volume, every single contract traded, at every single price level within that candle. It doesn't just show you that price moved, it shows you exactly how it got there. And you know what? At its heart, it's actually incredibly simple. It's basically just 2 columns of numbers inside a candle. On the left, you've got the BID. This shows you all the aggressive selling. On the right, you've got the ask. This shows you all the aggressive buying. So here's the key takeaway for now. Left side, sellers are forcing the issue. Right side, buyers are forcing the issue. That's it. And that word I just used, aggression, that is the absolute key to understanding all of this. You have to remember, the market is just one giant auction. And to read it properly, you have to know who's being aggressive and who's being passive. So you've got 2 types of players in this game. First, you've got the aggressive folks. These are the traders slamming the market order button. They're basically shouting, "Get me in or get me out. I don't care about the exact price, just do it now." Then you have the passive players. They use limit orders. They're the ones who calmly say, "Look, I'm willing to buy or sell, but only if the price comes to my level." Footprint charts are all about tracking the actions of those aggressive traders. Okay, so let's just make this super simple. A little cheat sheet for you. When an aggressive seller comes in and hits the bid, that volume shows up on the left side of the chart. When an aggressive buyer comes in and hits the ask, their volume shows up on the right. That's the fundamental mechanic of the whole thing. All right, pop quiz. Let's see if you're with me. If you're looking at a footprint chart and you see a big number, let's say 479 contracts show up on the bid side, who is the one driving that action? Who is the aggressor? Yep, the sellers. They were so motivated, so eager to get out, that they were willing to take a slightly worse price just to make sure their sale happened immediately. That feeling of urgency, of intent, that's what we're looking for. Okay, so we can see who's pushing and shoving now. But how do we turn that into actual usable clues? How do we find the story in all these numbers? Well, the biggest clue of all is a little something called delta. And the math is dead simple. You just take all the aggressive buying on the right and you subtract all the aggressive selling on the left. The number you're left with, the delta, tells you who won the battle for that candle. Forget the charts for a minute. Just picture a tug of war. On one side of the rope, you've got aggressive sellers pulling with the force of 100 contracts. On the other side, you've got aggressive buyers pulling back with the force of 250 contracts. So who won that little tug of war? And more importantly, what was the final score? You got it. The buyers won, hands down. And the score? Positive 150. That's your delta. It's a clear signal that the buying pressure was way stronger. And of course, if the number was negative, you'd know the sellers were the more aggressive ones. All right, now let's put it all together and look at a classic story that footprint charts tell beautifully. It's called absorption, and it's what happens when one side puts in a ton of effort and gets absolutely nowhere. So here's how the story unfolds. Step 1, you see a tidal wave of aggressive selling. The numbers on the left are huge. The delta is deeply negative. But, and this is the critical part, the price just stops falling. It hits an invisible wall. Step 2, this tells you that huge passive buyers are sitting at that level, just soaking up every single sell order that comes their way. It's a ton of effort from sellers with zero result. So step 3, the seller's attack has failed. And with all the sellers tired out, where do you think the price is going to go? Often, it's up. And absorption is just one of the stories you can read. You can also look for things like unfinished auctions, where a price might need to be revisited later, or exhaustion, where a trend just runs out of gas. It's all part of learning the language of the market's order flow. Okay, now, before we go any further, I have to be super clear about something here. This is an unbelievably powerful tool for analysis, but it is not, and I repeat, not a magic crystal ball. And I really, really can't stress this enough. Footprint charts don't just spit out buy and sell signals. Seeing a big positive delta is not, by itself, a reason to buy. They are for analysis, for context. They are one piece of the puzzle. So please, don't think you can just find some magic delta strategy that's going to make you rich. It just doesn't work like that. So how should you use it? The right way? You use it to add confirmation to your ideas at key areas you're already watching. Are you at a major resistance level? Pull out the footprint chart and see if the aggressive buyers are finally giving up. Did the market just break an important low? Check the footprint to see if aggressive sellers are actually showing up to push it lower. It's all about using this X-ray vision to add a powerful layer of evidence to your trading plan. At the end of the day, it really all boils down to this one idea. The market is always telling you a story. A normal chart gives you the chapter titles. A footprint chart, that lets you read the actual words on the page. The real question you should be asking isn't just where did price go? It's who drove it there, how much effort did it take, and what does that tell me about what might happen next?